Hello traders, welcome to another daily analysis. Today is December 14th, just right now at 7 p.m. Eastern Standard Time. So today we started London session with employment data from British Pound, from UK. And although the data was largely positive, but we did not see too much movement. As mentioned, the market was all gearing up for the FOMC meeting. At NY session, we have another PPI and retail sale data from US. Again, the data was quite in line, positive, but really there's not much reaction for today particularly. And crude oil inventory also came out as a draw today, which is supposed to help the oil market, but it did not, which we'll explain later on. And finally, in the afternoon, we have the FOMC meeting came out, and the result was as expected. The rate was hiked by Fed, and that's pretty much it. Later in Asian session, we have employment data from Australia. So let's talk about the FOMC first. So for US dollar, not only the rate was hiked, the Fed has now forecast 3 hikes in 2017. Originally, they say they're going to have 2 hikes. So right now, they're actually going to hike more. They also forecast the fund rate, from 1.4% to 1.7, from 1.7 to 1.4, from 1.9 to 2.1, and from 2.9 to 3% from 2017, 2018, and 2019. So essentially, they are tightening the interest rate. They are going to tighten faster and further. And the reason is because they do see that the economy will keep growing, keep picking up, and they are doing that to prevent overheating, to prevent overinflation. Now, of course, Yellen also talked about, people are worried about the fiscal policy from the new president, because right now the apparent policy is really boosting for the economy. So Federal Reserve are going to tighten the interest rate. Now, what's that gonna do is, of course, first thing for the US dollar itself, the rate is gonna be tightened, and the US dollar is going to go up. It's going to be more expensive. Of course, that's gonna hurt the stock market because now there's no more cheap money around. That's also gonna hurt the mortgage market, the housing market, and that's also going to hurt the exporting business. But whether it's going to go in really that simple direction, it's just economic theory. We'll have to see what's happening. But that's basically the correlation. They're going to make the US dollar more attractive, more expensive. So, people who are holding the currency itself will be happy, but people who need the currency as a median will not be happy because now it's become more expensive. So it's just it's just a game of correlation. You just have to weight the pro and con, things like that. But as a currency trader right now, the confirmation for US dollar, it's very, very certain. It has been certain, pretty much couple months past because of the data, but now it's more certain than ever that in next year US dollar is going to be the rising star. And right now, after today's meeting, we know the central bank's direction. So now nothing has changed really, pretty much in our direction, in our trade cost, but it's just more certain right now that US dollar is going higher in 2017. Now for euro dollar, the economy is negative itself, and also the easing environment continue all the way until 2017 December. So really, these two factors has already diminished the euro dollar strength. Now on top of that, you have 2 major elections from France and Germany next year. Now on top of that, the counter partner, which is the most traded pair, US dollar. Now, because of the strength in US dollar, of course, that's going to diminish euro dollar even further. So euro dollar, again, it's still very negative. And right now, we just have more confirmation toward its negativity. However, it will have more volatility to go up and down. And the reason is because you have more drama, basically. You have more political events. That's going to cause, short-term optimistic and short-term pessimistic. So that's why you're not going to see a one-way street like you see in Japanese yen or Swiss franc. Speaking of Japanese yen, Swiss franc, both are still the biggest loser. I really don't see any reason for them to rebound even in 2017. Now I know next week we're going to have the rate decision coming out from Japan, but the market is really expected to be unchanged. Even let's just say BOJ surprised the market, they're only going to cut the interest rate. So it's very straightforward. For Japan and Swiss franc, they are not going to raise rate anytime soon. So the only surprise they can pull is to cut it. Now, if they cut it, of course, they're going to depreciate their currencies even further, making them even the biggest loser in the currency trading. So Japanese yen and Swiss franc is very certain, very confirmed to still very weak all the way till 2017. Euro dollar is also weak, but I'm saying that expect to have more volatility ups and down due to they have more political drama. British pound, again, today's data was again largely positive, but right now, as mentioned, what happened in British pound is that the Brexit still shadows the future of UK, and we still don't know where it's gonna go. So right now, regardless of what you're gonna do with the my suggestion is just don't hold it long term. You can always do in the short term trading. You can always do in the intraday trade. And if you do anything with it, just move your stop loss to break even. But the probability, of course, it's more in the downside. And it's not because the fundamental, it's just the sentimentally speaking, you have more short seller who wants to sell British pound, who are really looking forward for that one piece of negative news. So British pound, you can buy against Euro, Swiss franc, Japanese yen, and still sell against dollar, Aussie, New Zealand, and CAD. So it's still it's sort of a neutral currency toward bearish, but nevertheless, it's not a currency to hold long term. For Canadian dollar, the WTI actually had a large red candle today, regardless of crude oil inventory drop. Now the reason is because the OPEC crude output actually hit record high in November. So the story is very similar. It's very, very simple. The global economy is just not doing well, so that's why you have more supply of oil. Now the OPEC is trying to artificially control the supply, diminish the supply so that we can boost the price. Now the problem is that people don't have enough confidence toward the OPEC and their ability, and that's pretty much the story right now in the oil market. So what's going to happen is that, yes, the direction, as mentioned, is still going to go up, but you will have a lot of volatility on the way up. You will have a lot of ups and downs. And the biggest reason is because the oversupply is a fact. It's a fundamental. The artificial curve from OPEC is not too confident for traders. So that's why it's going to be a slow way climb up. On top of that, we don't know how far or how long it's gonna go. Now, what's gonna do to Canadian dollar is that Canadian dollar is very neutral economically speaking. So it's very neutral, as the central bank saying they are not going to do anything until 2018. So that's why Canadian dollar is really going to largely go around with the oil market. And another thing to take in consideration is that because of the strength in US dollar, that is going to pressure the oil market as oil is denominated by US dollar. So that's just something to take into consideration. So again, that's another factor to pressure the oil market. For Australian dollar and New Zealand dollar, as mentioned, that if the US dollar gaining more strength, that's going to pressure these two currencies. Now, nevertheless, they are still a very strong currency to hold, especially against the weaker currencies. So I'm still very bullish in Australian dollar and New Zealand dollar. Really, the biggest 3 stars on my list is US dollar, Australian dollar, and New Zealand dollar. And the biggest 3 loser is Japanese yen, Swiss franc, and Euro dollar. Now, Canadian dollar and British pound, it's more neutral. It's gonna go along with the news. So that's pretty much. I know it sounds exactly the same as last week and yesterday, but today, because the events was really not a surprise, it's just a confirmation to let us know what's pretty much going to happen in 2017. So now we are more certain in our previous trade call and direction. Now tomorrow, although you will have 2 central bank decisions from SMB and BOE, but both really are expected to be unchanged. And if anything they are going to do, they're really not going to do anything too much. So really going to remain unchanged, not really an event to trade. And then in a New York session, you have US data. that's pretty much the end of the week, because Friday the only data is the building permit from US dollar. And as mentioned, this is really the last 2 weeks of December. A lot of traders, institutional traders, are already taking holidays off. So really expect thin liquidity and pretty much treat it as the end of the year. I'm still going to do daily analysis, and I'm still going to trade, but really just, basically just be in the market and not really looking to take any big position. And that's pretty much it for now, for 2016. We will see what's going to happen next 2 weeks. Next week, again, the BOJ is going to have the rate decision, and we'll talk more about that on Monday. So let's take a look at our currency pair and what I have done today. So although I have a lot of position today, I pretty much exit everything prior to the FOMC today. So a lot of small losses, few wins and few losses. Generally speaking, it's a losing day for me. It's not because of small position I took. It's actually I took Euro Pound during the risk event, and that was very simple trading. I was just trying to maybe make a quick buck, but unfortunately it did not react well. So I as you can see, it dropped right now, but when I took it was in I think it was in this candlestick. So actually go up against me, and then because my stop was very small just on top of that. So it's small position, not a big deal, but not a good luck for me to do this risk events. And then dollar yen, I actually put a pending order to short in case we have a surprise from yen, and we did not have a surprise, so I did not get filled. I canceled the trade, put another short when we are hitting 116 right here. If you take a look at maybe 15 minutes, when we are at 116 was a little bit struggle, so I put stop loss around 120, 116.25 to 50, and was really hoping, as mentioned, I was looking for a retracement because of the non-surprise event. That means that because the result has already been pricing. So normally, back then when I trade Australian dollar, the New Zealand dollar, when things like this happen, where people are already pricing back then, especially for New Zealand dollars rate cut from RBNZ, you actually see a reverse movement. So the rate cut, but people are buying into New Zealand dollars. So today I was hoping to see the same thing, the rate hike, but because the price people have already pricing, I was hoping to see a little bit drop, but it did not happen at all. It just keep going higher to another 250 pips right now. So it is what it is. Maybe I should have known, because the difference is that you actually have this kind of retracement for the beginning of this week. So maybe that's already a signal that we are not going to see too much retracement. But I really was hoping that 116.12 will be the highest point, and that we retrace here, the FOMC we're gonna hit here. Maybe we're going to give us 50 pips, and then we can continue to go higher. But it did not happen. We just keep going higher, and that's why I have another loss here. Again, small position, not a big deal, but kind of frustrated. Of course, things did not work out as what you're hoping for. So that's pretty much the trade I took. Let me see if any other significant one. The other one I took, Aussie Swiss, not really much movement. I got out, small win. Aussie yen, I got out small loss, and New Zealand yen, I took this one way before on this candlestick. So just write it, grab 30 pips, finish up with that. And dollar Swiss was actually the big loss for me. And the reason is because this downward movement was just so huge. So really, I was really hoping, to break even before the FOMC, but it did not give me any chance. It just all the way keep going down. So of course you can say, hey, Enho, this thing's going up, you should have held it longer. Yeah, but I don't know it's gonna go up, right? In these kind of events, you really don't know what the central bank is going to do. You have high probability of rate hike, but you never know. If they don't hike the rate, it's gonna drop further. So for me, it's just I like to play safe. So I rather just get out when I'm still have a small loss. So I get out, and of course, things keep going up. And that's pretty much it. I also have a euro dollar, also a small loss. Again, same thing. I have to get out before the event, and then and of course, if you're looking back, you always feel like if you hold it, but that's really a very dangerous thought to have, because you actually try to justify your decision based on the result. But in terms of trading, you never know the real result. So you have to learn to make decision and justify your decision based on the available information that you have. So that's the importance of having a trading journal, because always understand why did you get in a trade or get out of the trade based on what's happening in front of you and based on what you think could have happened. Now, because for me, whenever I think what could have happened in the future, I always, especially when a central bank decision, I always say it's 50-50. So I don't want to put gaze on that. If I don't have more probability or certainty, I rather play safe. So that's why I will not say, oh, I should have held it, my short position, that I would make a lot of money. But no, I wouldn't do that. It's just you create a lot of sort of a unhealthy habit for you, because then you will always adjust a decision based on the result. So again, a winning trade is really the trade that you play by the rule, play with your plan, and that's a winning trade regardless of making money or not. A losing trade, on the contrary, is really the one you break your own rule, you break your own plan. So even though you might make money, that's a losing trade in my dictionary, because you are setting yourself up for a very dangerous habit. If you really that the money, profit and loss to judge whether you make a good trade or not, for me personally, that's really a recipe of disasters, because sooner or later you are going to break your rules, and then sooner or later you're going to really become a chaotic trader. So that's why today was okay. I lost pretty much, I think about 0.1, 0.2% overall. As I mentioned, play very, very small, and that's pretty much it for me. And then I don't really have many big events to trade. Right now, I'm just going again to trade with the sentiment for the fundamental, and really looking to buy US dollar, Australian dollar, and New Zealand dollar. Looking to sell euro dollar, Swiss franc, and Japanese yen. That's really my plan for now. So let's take a look at our daily chart. Alright, so look at the euro first. Euro pound, as mentioned, really not much movement, as you can tell. Really not, still really going trading around this 200-day EMA. Take a euro Swiss, same thing, not much movement. Euro dollar is the one that has a movement today. As you see, you have this large candle, and now we continue to going lower, even breaking 1.05. This was a significant level, 1.05. So looks like, is this a historical low? Let me take a look at weekly. And yeah, it's pretty much for the past 10 years, it's a very low historical low. We're really at the parity right now. It means that we might reach 1-to-1. Well, if we reach 1-to-1, I am really going to travel in Europe. Well, that's just a side note, because if we reach 1-to-1, that would be a 1-to-1 will be very good, chance to really buy some European stuff. But really, of course, it's not good for people who are using euro. So what happened, 104. Wow, that's really a historical low. Sorry, let me go back to daily. Okay, so of course the direction is going down, but obviously I'm not going to sell at low. So really right now you're just looking for any pullback to give you a candlestick signal to get into it. That's my plan to short euro dollar. Same as euro Aussie. Euro Aussie will actually be maybe have a better room to short, but again we have to wait for a good level. Euro CAD, same thing, and Euro New Zealand, it's exactly the same thing, just looking for a better level to short. Euro Yen is really not a event, not a tradable currency. Both are weak, so really don't want to touch it. Look at British Pound, Pound Swiss Franc, again, really not much happening. Cable has a drop all the way till 1.25. But if you look at a bigger scale, you are still really trending in this area. So really nothing much going on. You're still right in this area, and your next resistance is right, next support is right here. So really you're really between 1.23, 1.2250 to 1.2750. It's a neutral currency basically. You need that piece of negative news to drive it lower. Pound Aussie, again, not really non-event, right? Nothing happened. Pound CAD, Pound New Zealand. Another thing I realized is that, as mentioned, I think traders and market participants have become numb. What I'm saying is that the volatility you see in the market whenever we have this kind of event was so huge at the beginning of this year, or even all the way last year. As mentioned, whenever there's a terrorist attack, large money into Japanese yen. When the Brexit happening, that was a huge volatility. And then Donald Trump got elected, that was a huge volatility. But then you soon got recovered. And then last week, the ECB, huge volatility, you soon got recovered. And now this week, Federal Reserve. Today I was of course trading live. It doesn't even give me that much volatility anymore. You see the Fed hike the rate, and then you see the dollar goes up a little bit, and then the press conference it goes up a little bit, and another little bit. So people actually get into the market, more slowly. Of course, that could have a lot to do with December, which a lot of big traders are already out of the market. But I just find out that people are getting numb in terms of the global events. It's really not much reaction anymore. Swiss franc, and it makes sense, that's just the nature of human being. It's like how we used to watch movies and needs a little bit stimulus. Now, if you don't have a huge science fiction, you don't have a huge, computer graphic, if you don't have enough visual audio stimulus, then it's not an action movie anymore for people. So that's really where we're going right now, the directions. Dollar Swiss, of course, very nice solid green candle. Again, everything right now is too high in terms of price level to buy, so really want to wait a little bit, wait for some pullback, especially for a daily trade. Now, if you are a intraday trader or you're trading 4 hour or hourly, of course you can always buy with the trend. Just make sure you have a bigger stop loss. Dollar yen, again, everything is just keep aging higher. Aussie Swiss, Aussie dollar, it's actually a drop. Aussie CAD. Aussie CAD is actually interesting because of this nice kangaroo tail. But I don't want to steal Australian dollar against Canadian dollar. I don't have the fundamental reason to do it. Aussie New Zealand and Aussie yen. If anything equal, I'm actually more favoring Australian dollar. CAD Swiss, CAD yen, and really nothing much going on. New Zealand Swiss. Look at that. Even if you only trade technical, it is really the best to use pending order, because you will really avoid a loser right here. Even if you don't care about fundamental, you say, I want to trade technical. This is really the best thing I learned from water, is that you always use pending order to get filled, because although it looks like you don't get into the best price level, but you really avoid a lot of losers. New Zealand Swiss, New Zealand dollar, New Zealand CAD, and New Zealand yen. So really not much to do, especially now. I would really suggest you at least wait a couple days when market to die down, and then of course, the timing is not really good just because you have the last 2 weeks of December, right? So let's take a look at 4-hour. Okay, I think in this kind of case, we could see if we can find any trend. So as I mentioned, I am bullish in Australian dollar, Aussie Swiss, and that's a nice solid candle, but it's too close. For me, it's too close to this moving average. For me, it's just a range bond. I don't want to take. I like to take something that's not, the candlestick is not touching this 100-day, 110-day EMA. Aussie yen, nice bullish candle. The close is not high enough. I don't really like it. I like something like this. I like something like this. I also like something like this. So it's fine. We'll just wait. Aussie, Euro Aussie. Euro Aussie, again, very good trend start appealing, but we don't have any signal right now. Take like New Zealand Swiss. New Zealand Swiss, again, very nice. We are actually pulling back. So later on, we might have a signal. New Zealand. New Zealand is actually not bad. This is a good candlestick to get in. I might get in here actually. Okay, and Euro New Zealand. Euro New Zealand, it's a very good trend start appealing, but we don't have a signal. Finally, take a look at dollar yen. Again, keep going up. We need a little bit pullback. Dollar Swiss. We also need pullback in euro dollar. And that's it. That's pretty much it, guys. So New Zealand will be a pretty nice one to ride the trend if you want to do that. Otherwise, I'm gonna wait for London session to do more hourly intraday trade, and I'll be back tomorrow with another daily analysis. And tomorrow, if you wanna trade the BOE, really not a, you could be there, and if there's a surprise, the only thing they might do is they're going to actually, I don't know what they're gonna do. They might hike the interest rate because the inflation, or they might actually cut it to stimulate the market. It's really, their hands are tight, as I mentioned. The inflation rate happening right now in UK is really artificially because of the currency. It's not because the economy is doing well. So that's why central banks' hands are tight. So we'll see what happened. Anyway, I'll be back tomorrow. I hope this video is helpful. If you have any questions, feel free to ask me or comment below. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching, guys. Have a great evening. Thank you very much. Bye-bye.